Good morning and welcome to Tinks Invest. Talk about investing, finance, fresh development. For today's video terms only. The investment on top of today will be Ethereum ticker ETH. I know it's my second video that I'm posting again today. Respect to Ethereum stock recording is up 2:42 p.m. on Eastern time. Current trading to $2,475 level, down about 2.28% so far. And respect to the sell-off that we're seeing across the whole crypto market right now is mainly coming from one specific catalyst that came out about a couple hours ago, and the media affectation got picked up about 20 minutes ago. With respect to an article on MarketWatch on the depictions around the forum that happened today, a virtual forum, right? The Aspen Security Forum, which we learn a little bit more about the Fed's activity towards their regulatory constraints towards crypto assets going forward, right? And we hear a lot of verbiage coming from the chairman of SEC. His name is Gary Gensler on Tuesday, which he, based on the depiction, he has warned that the new regulations are needed for cryptocurrencies and digital assets in order to protect the U.S. national security, right? And based on some of the specific adjective that he used during the speech that he was giving, and he quotes, "This asset class is rife with fraud, scams, and abuses in certain applications. There's a great deal of hype and spin about how crypto assets work, right? In many years, investors are not able to get rigorous, balanced, and complete information." Right? Obviously, he's expressing particular concern on stablecoins or digital tokens that are pegged to the US dollars or another fiat currencies and facilitate trading between various cryptocurrencies, right? Obviously, with this media affectation is negative, right? And this is something that we've been observing from the Feds, for the, ever since the FOMC meeting, right, with respect to Janet Yellen, on, having that, impromptu meeting, I think 2 Mondays ago, with all the regulators on talking about how they're going to be structuralizing the regulations towards stablecoin or other crypto assets. And then, like, later on within the week, I think like 6 days from then, after that meeting, there was a percolations around the revisions for the infrastructure bill. And then, not too long ago, coming from Don Byers, right, which is from the Feds again, he released this 58 pages of draft, this new crypto bill on basically listing out all the checklists for crypto regulations that they're proposing going forward, right? Obviously, with all of these media affectations and the Feds being super active around putting some regulatory pressures towards crypto asset class as a whole. It could be some sort of like tax implications, or it could be some sort of like commission structure that could be, some sort of a partnership with all the exchange platforms, or it could be some sort of tax bracket structure that they will impose on us, comparable to like the capital gains tax structure that they have across states, or anything like that. Any restrictions can subsequently marginalize the potential profit that you could be, taking in as an investor, right? So obviously, it's a negative pressure. These incentivize investors to be investing into something like that when they are screaming things like scams, fraud, and you know, um, illegal activities, if you may, overall, right? The verbiage that they use, I think they are probably blowing this out of a little bit out of proportion, to be honest with you. And I think we kind of have to verify with respect to their verbiage why they incentivized to be speaking, in this negative tone. It's something we have to watch out, right? Because it's important. They are people of power, so they do have a lot of influence into the market. But ultimately, we in the business of risk mitigation, we are in the business of understanding the meaning behind their face value, right? So it's something we have to watch out for. I mean, regulations for any financial assets is important, but for them to be screaming something so blatantly, calling it scam, calling it fraud, without substantive evidentiary support, it's a little bit of overkill, if you may, right? So I'm gonna go through technical analysis again. Obviously, ahead of the London fork, the anticipated pressure is basically watered down by all of these negative news that we've been having from the Feds. and the regulatory constraints. So stay tuned, stick around, let's make some money. Moving on to technical analysis for Ethereum ticker ETH, on recording of 3:02 p.m. on Eastern Time, currently trading like $2,480, down about 2% so far. And you can see that with respect to today, today's low was about like 2,450, which is the level identified so far. We subsequently surged up, and we hit sometimes around like 2,545, but subsequently went back down because for the obvious reason, the SEC news that it got picked up, right? With the depictions from Gary Gensler on calling crypto assets as a whole scam, fraud, and any some sort of like anti or criminal activity, if you may, right? So obviously, with someone with his level of status and power and gravitas, frankly, can drive some influence into the market, right? And that's the reason why we are currently water downing the anticipated pressure that we should be percolating for the London fork debut for tomorrow, right? And I know there's some convolutions with respect to the dates, right? Is it on August 4th? Is it on August 5th? And the convolution is mainly driven by the time zone difference, right? With respect to, knowing the fact that US is technically a day behind in comparisons to international side of the world, right? Like in China on the other side of the hemisphere. So I know the official date and time should be on August 5th, 8 a.m. Eastern time. Okay, so technically we still have like 1 day left per se if you count today as well. And the anticipated pressure is still in play, right? But obviously we are being, dragged down by this negative news. And news are something that we can never really time, and that's why you can never time the market. Because ultimately they could spin you out of proportion that, you could lose all your money from that if you buy an option from there, right? So ultimately, we are in the business of risk mitigation, despite how the media is going to spin us, right? But by looking at the frames of reference in the resistance levels and dollar cost, at an ideal and logical level, would be the following, right? I think if you buy now, right, at 2,450, it's a great level because that's a substantive level of consolidation. It seems like we are building a new cushion at this level right now. And the next level that leap down will obviously be and I drew the lines here, right? The 2,350, which frankly is not really a substantive level. 2,250, which is just another level of like flat number, right? These levels are flat numbers, but the real level is the 2,150, right? Which if we get there, I will buy more Ethereum from there, right? Just basically knowing the fact that the supply and demand dynamics as we shift to 2.0, the circulations of supply for Ethereum is going to be, hindered, right? So when you have less circulations of supply, you will subsequently propel the price to go up. That's typical squeezing effects, right? So I think ideally for, this next couple of days, we should see a little bit more volatility. We should potentially sell off on the London fork, right? And after the fork, we should continue to percolate up, right? And I think we need to cool down. I do think that the London fork should be the normalization type of momentum by like basically pushing the MACD down a little bit more and normalize the RSI down to more of an optimized level before we could pump up, right? Because like if you keep dragging up like this, right, you will be extremely overbought at all time, and the sell-off will be relatively more harsh, right? So to grow in a more of a normalized type of cadence, you need to go up, consolidate, to cool down the whole technical analysis, and then continue to leap up from there, right? You don't ever just go up in one shot because that's not logical, right? And people don't invest like that unless you have unless a lot of people have a lot of money, unless there are a lot of whales that are investors in the pool. But most of the time, it's just like a selective handful of whales, but overall majority are public investors that's driving the volatility, right? So something to watch out for, and to dollar cost average would be again, right, 2,450, which I think that's coming. I think it came today. So if you got lucky and you bought in today, congratulations, right? But ideally, I do think we should be selling down a little bit more just to cool down the whole technical analysis chart, right? Normalize the RSI to a more optimal level, cross down the MACD a little bit. We should see a little bit more sell-off coming, knowing the fact that we are having a relatively more of a curvature right now. So as we cross down, we should be normalized at the 2,250, consolidate a little bit, and then ideally go to 2,150, and then continue the bull rally ahead of us going forward. Right, just to recap on numbers and technical analysis, again, right, the 2,450 is a new cushion that we're forming right now. So I do feel comfortable if you were to buy a little bit right now. Would I be throwing all my money into this price level? No, I would slowly chip away, maybe 10% or 15% of your cash balance, right? And as we go down a little bit more to 2,250, and again, 2,250 is not a substantive level. It's just a flat number people typically, buy at because it's a number that's easier to look at. But ideally, we want to get down to 2,150, and we should get there because of how hot we've been running, for the last 12 days so far, ever since the B-War summit that we had, right? So I wouldn't be surprised if we were to get consecutive negative news afterwards, after the London fork debut on the 4th or the 5th, depending on what time zone you're at, right? But these are the levels that we logically want a dollar cost average at. So I would not, go crazy, try to study the chart, or try to chase the pump or buy the dip without really thinking through the level of risk profiles in the chart, right? These are the levels that I explicitly and want to give it to you in more of a simplistic fashion so you guys can use these numbers to dollar cost average, in a methodical way going forward, right? In respect to corporate adoption, 9,820 times, 20% going forward, 4 times your money if you buy the 2,450. Just for their respect, my technical analysis on Ethereum Ticket ETH again. Hopefully this is helpful into, structuralizing these volatility that we're currently seeing right now, right? I know that it's an emotional roller coaster, and that's why by practicing technical analysis and understanding the dynamics of, what are the macroeconomic drivers and what are the supply and demand dynamics looking like and how are people trading psychologically on the chart will give you that clarity to formalize your trades going forward, right? Never buy based on emotions, never buy based on feel, if you may, right? And yeah, if you have any questions, feel free to give me a shout. I'm relatively available all the time. I just try to be helpful and try to help as many people as possible. But really appreciate you and, really appreciate the support that you provide to me continuously and on a daily perspective at the same time. But yeah, so stay tuned for things to come up. Take care.